Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Today we're going to be talking about Tesla's Q3 update letter. They just reported earnings, which were pretty blowout. The stock was up huge after hours. We're also going to go over some of the questions from the conference call and try to give our take on them. Okay, so you can see here Tesla's chart. The stock was at $254 today. It's up about 20% after hours after this pretty big earnings beat. They happen to have been profitable this quarter. A lot of people expected them to be to have negative earnings, and they ended up beating those expectations. Now, although the stock is at $306, it's still down actually from the beginning of the year and from a full year ago. So despite Tesla being in a much better position now than it was a year ago, the stock hasn't really reflected that yet. All right, now before we get started, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. You can also check out our spin-off channel, which is called TMIO. I guess you can search for it on YouTube, but I'll put some links in the description below. And for now, we're putting Tesla videos on that channel, but we hope to expand in the future if YouTube allows us to do that. Also, if you want to support us further, you can check us out on Patreon at patreon.com/themarketisopen. I've actually put the spreadsheet for the income statement that I'm going to use in this video. I put it there for free on Patreon, so go check that out. And you can also follow us on Twitter at themarketisopen. Okay, so let's start by going through the Tesla update letter for this quarter. So cash increased by $383 million. They now have $5.3 billion in the bank. I mean, that's a huge amount of money from a year ago when they had about $2 billion and people weren't sure if they were going to run out of cash, but cash has consistently gone up. I mean, they did issue shares at $240 a share. I personally didn't really want them to do that, but investors wanted to feel more confident that Tesla had the cash to continue, even though cash was steadily increasing, as it still is. At least if they have excess cash in the future, they can use it to pay off debt, even though it's probably better for them to buy shares, but there's no point of buying shares at elevated prices and issue shares at $240. That doesn't make a lot of sense. Anyway, they were cash flow positive. They were actually quite profitable for this quarter. Their GAAP operating income was $261 million, $143 million was their net income, and they had a 22.8% GAAP automotive gross margin, which we'll look at soon, but that's pretty crazy. That's up about 4% from the previous quarter. Their operations are all on track. Gigafactory Shanghai is ahead of schedule. They're probably going to start ramping up production by the end of the year. They're already doing a trial ramp up of Model 3 vehicles in China. The Model Y is also ahead of schedule. It was supposed to be released at the end of next year or fall 2020, but now it's been pushed up to summer 2020. They also had record vehicle production of 96,000 vehicles, and 97,000 were delivered. Tesla also deployed 477 megawatt hours of storage capabilities or capacity, and their solar grew 48% over the last quarter, but the last quarter was pretty poor. It's actually down from 2 quarters ago. But Elon does believe that the solar business should grow rather quickly. I believe they're also going to be talking about the solar roof tomorrow, so there's going to be some sort of presentation with regards to that. Okay, now some pretty interesting things from the summary. So last year they were focused on ramping Model 3, but this year they're focusing on cutting the costs of that car, and that has really shown in terms of the profitability of the company. It says despite reduction of the average selling price, their gross margin has actually increased. So the prices of the vehicles are coming down, but the costs are coming down even faster than that. So that's pretty amazing. Also, very important is the efficiency of their capital expenditures. They're executing at an extremely quick pace. The Shanghai factory was built in just 10 months. It's been way less expensive. I think they were forecasting it to be 50% less expensive, but apparently it was 65% less expensive than the one in the United States. So that's pretty crazy, partially because it's in China, but also it should help make future gigafactories cheaper based on the learnings from the current one. Okay, now looking at Tesla's financial summary for the quarter, their dollar value of the revenues from vehicles, although they produced and delivered more vehicles this quarter, their revenue was actually down. So that sort of goes in line with the fact that the prices of the vehicles have come down. However, they were actually profitable this quarter, and they weren't in the previous quarter because the margins have gone up significantly. You can see the margins have gone to 22.8%, all the way up from 18.9% from the previous quarter. So that's about a 4% increase in the actual margin number. So pretty insane increase in margins. It's also pretty cool that if you look at last year's margins, like a Q3 from a year ago, the margins are very close to being on par with that, despite Tesla selling the highest and most expensive vehicles back then in that quarter. Now Tesla has basically lowered all the prices of the vehicles and the tax credits are all gone, yet the margins are coming closer and closer to achieving that level. Okay, so Tesla made $143 million in terms of GAAP net income for this quarter. Their non-GAAP income was $342 million, so that translates to 80 cents a share for GAAP, $1.91 a share non-GAAP. You could see the difference. We have a video actually from yesterday which talks about stock compensation expense, and that's a big chunk of the difference between GAAP and non-GAAP. So if you check out yesterday's video, that'll help explain the difference there. Tesla's CapEx is $385 million. That's up from the prior 2 quarters, but actually down from last year. Same quarter last year. That just shows how much more efficient Tesla is with its capital spending, especially given that it's ramping up 2 projects now, the Shanghai project and the Model Y project in Fremont. They ended the quarter again with $5.3 billion in cash, which is more than they've ever had so far. Okay, so a few other things from the quarter. So in terms of revenue, the number of leased cars has tripled. So that sort of impacts revenue for the quarter because the leased cars are paid over time. It's not like somebody purchases the car and Tesla gets all of the money right away. So that impacts the revenue. It impacts the free cash flow and their earnings. However, over the long term, it probably isn't like such a terrible deal for Tesla because, I mean, they get interest on that lease and they get the car back after the, I guess, 3-year period, let's say. And Tesla is planning to use that as part of their robotaxi network. So hopefully in 2 or 3 years, they'll actually achieve that goal and actually have a robotaxi network according to Elon. He believes that's possible. The other thing impacting revenue was that the Model 3 mix increased. I mean, Model S and X have been under pressure for quite some time, although the demand seems to be strong for those vehicles, so that shouldn't be too bad. The average selling price was impacted due to standard range trims, and I think they lowered price on that vehicle, but I think they actually raised the price more recently. So hopefully they said that they're becoming a little bit smarter in terms of pricing. So hopefully that'll help revenue in the future. They're planning to accelerate growth, obviously, with Gigafactory 3, Model Y in Fremont, and boosting the current production lines. Now, they do have $500 million of deferred revenue on their balance sheet, so that's full self-driving revenue that they're going to release because they release Smart Summon. They're allowed to release some of that revenue, so that goes through the income statement. I don't really like that too much because it's sort of inflating the revenue now. Before it was deflating it, so I'm hoping this 500 million sort of goes to zero already. Like they should get rid of it. Probably it'll take them about a year or a bit longer to run that all through the income statement. I believe this quarter they said it was $30 million was recognized in terms of revenue due to the Smart Summon being released last quarter. Profitability. Definitely gross margin had a huge impact in that, given that the revenue was lower. So it was all gross margin. This is mainly cost cutting, given that the prices of the vehicles are coming down. In terms of what caused the gross margin to be so high, we can point to operating efficiencies and vehicle quality. So they're becoming more efficient with how they're running the business. Fixed cost absorption, as the number of vehicles that they produce increases, those fixed costs get spread over more vehicles. Reductions in manufacturing and material costs. Obviously, they've learned a lot over the last couple years, and their new gigafactories, and they're making changes and improvements to the factories to try to reduce the cost. Smart Summon deferred revenue, which we just talked about, so part of that revenue was recognized this quarter, and that helped inflate a little bit the revenue for the quarter, and that helped with profitability because it's just software revenue, which is basically pure, like super high margin revenue. Foreign exchange was the last thing, I guess, that helped them favorably this quarter. In previous quarters, it hurts them. So I wouldn't read in too much to foreign exchange. In terms of cash, $5.3 billion of cash. I mean, they raised a huge amount of money with their equity offering previously. They probably didn't need all of that money, but it's sitting on the balance sheet. They can deploy it eventually if they ever acquire it, and if there's ever a problem with the economy or whatnot. I mean, that's a great cushion for Tesla to have. But they did have positive free cash flow, which is just going to be increasing that cash over time. That was $371 million. They say operating cash was negatively impacted due to higher leasing. So again, people don't pay completely upfront for a leased vehicle. However, that leased money is sort of reoccurring, and they'll be recognizing it quarter over quarter, though the numbers are quite small for leasing. And there was higher capex this quarter they're ramping up Shanghai and Model Y. So that's pretty exciting because soon you'll see, once those two projects start producing vehicles, it'll sort of really boost the revenue. Okay, so in terms of their operational summary, Model S and X is still not really where we want it to be. It used to be at 25,000 vehicles approximately per quarter. Here we're at 16,000. So, that's production, not so great. Deliveries of S and X were 17,000. So it is sort of ramping up a little bit. They did say on the conference call that the demand for Model S and X was still quite good, though Elon did have some comments, which I'll talk about a little later. Model 3 production is pretty good. And you can see what percentage of that has to do with lease accounting. So quite a few vehicles from Model S and X have been leased, but about triple that number for Model 3 have been leased. So that's what's sort of reducing the revenue. You could also see that solar has been up from 29 megawatts to 43. But if you look back 2 quarters ago, it was 47 megawatts. So still down from 2 quarters ago, but up from last quarter was pretty terrible for solar. Though, again, they're probably going to be releasing the solar roof sometime soon. So that should help boost things. Plus, they are pushing solar. That said, winter is coming. That definitely impacts the seasonality of the solar business. In terms of the storage business, actually, I would think winter might help the storage business because more extreme weather occurs around the fall or winter time. And we have seen record megawatt hours deployed for energy storage, like Powerwall, PowerPack. They are pushing their commercial version, the Mega Pack. And I think we'll even see a boost here next quarter, in Q4. They said they're starting to deliver some of these big pre-built mega packs, so I think that should be pretty good for the company going forward. Now, it seems that the number of store and service locations has, slowed down from the previous quarter. They went from 377 to 402 last quarter, and now they opened up 11 more stores and service locations. So I think that's actually a good thing because who needs so many stores? But service locations are pretty important. If you have a service location, you're more likely to purchase a vehicle like a Model 3. However, Tesla is ramping up their mobile service fleet. They did open up a larger increase in mobile service last quarter versus this quarter, but they still are increasing quite rapidly. It was still a 10% gain. Supercharger stations, supercharger connectors, destination chargers, these are all increasing by about 3 to 6% in the quarter. So that's pretty impressive. That's 30% growth from last year. Definitely very important for people that own the vehicles. And I also think that as other car companies release their supercharger stations, technically Teslas just need an adapter to connect to their stations and charge the vehicles there. Okay, now this chart here is super important. I think this is the first time Tesla's ever put out a chart like this, basically showing their annual capacity and basically their plans, what they plan to do for the future depending on the vehicles. Model S, X, 3, and Y, Semi, Roadster, and Pickup are also there. But I think this helps give people a better idea about where their projects are going to be located and sort of when or what stage they're currently at, but you can sort of map it to when these projects will be released. So currently in Fremont, you can see the capacity of Model S and X and Model 3. They are working on Model Y, and they're going to be hopefully ready for it by mid next year. The Shanghai Gigafactory is undergoing pre-production, so they're aiming to have about 150,000 unit capacity from that. So that should definitely help the company. That's about half the current Model 3 production that Tesla currently has, so it should increase it by about 50% once they get ramped up. And of course, China will probably become the largest market for Model 3. Actually, in the United States, the Model Y, I think, will sell a lot better. People like SUVs a lot better, especially since they're no longer gas guzzlers. Electric vehicles, especially SUVs, I think will sell a lot better, whereas smaller cars, mid-sized sedans are probably more popular in China. In terms of the Europe Gigafactory, they are planning to choose a selection, a place for the European Gigafactory to produce both Model 3 and Model Y. My guess is probably somewhere in Germany. I think Germany has a lot of legacy automakers and there's a lot of talent over there. Although, Germany doesn't want to lose those legacy automakers, which if some of them don't keep up, they might not be around for very much longer. Though Volkswagen, for example, is investing very heavily with all of its brands into electric vehicles, although they haven't really come close to Tesla at all yet. But I think if Tesla opens a place in Germany, which they already have, they already have operations in Germany, they can be close to their current operations. They can harness talent from other companies. And I think it would be good for Germany's overall economy, which is one of the best economies in Europe. So in terms of what happened this quarter, which we probably already know, but Tesla released Smart Summon, which was used about 1 million times, that you can tell your car to come towards you on its own if you're about 200 meters away. So that's pretty impressive. I wish I had that feature with my current car because it was raining really hard the other day and I couldn't do anything. They also launched a V10 of their software. That's an over-the-air update. People who have Model 3 now can access YouTube, Spotify, Netflix, Hulu, karaoke. So it's pretty crazy that a over-the-air software update, they were even saying on the conference call, since when does your car get better after you purchase it? So I don't think there's no car currently on the market that does that except for Tesla. In terms of the powertrain, they've also updated, Model S and X was updated earlier this year, but they've updated the range of Model 3 from 240 mile range to 250. That's again another software update. They're using making the energy more efficient rather than putting more batteries into the car, because batteries are actually quite expensive for the physical battery. So it would be great to pull out as much efficiency as you can from the vehicle software in order to get the best range. This is an interesting chart that they posted here in their update letter. So the lowest range Model 3 seems to be pretty on par with some of the highest range competitors, and still nothing beats out the 2012 Model S in terms of range. So even the Porsche Taycan, which is about $150,000 starting. I think they have a new model now, the 4S, which starts at $100,000, but it's still no match for the Model 3, which starts at a little less than $40,000 US. So that's pretty interesting. I don't think Tesla's going to let their competitors get close to them. As soon as the competitor ramps up that range, Tesla will probably increase their own range. And there was a question on the conference call, which we'll talk about later, about will Tesla ever sell their powertrains or batteries to other companies. So stay tuned at the end of the video for that. Okay, let's just touch on these three things quickly. So in terms of the storage, they deployed 477 megawatts in Q3. They're launching the Mega Pack this quarter, and they're pre-assembled in the Gigafactory. So they're going to start delivering them in Q4 2019. I think that's going to be very good for Q4 revenue and for the future for all of next year. I think they're well positioned for that storage business to be really good. They seem to have more capacity, and they're allocating resources to the storage part of the business. So Elon thinks this part of the business could be even along with solar, could be larger than the actual automotive part of the business. So we'll see if by allocating resources to that, this business can expand more quickly than automotive. For sure it'll expand more quickly because it's coming off a lower base, but let's see if it can catch up to automotive. In terms of solar, they launched a commercial solar configurator for enterprise, small, medium enterprises. So they have pretty good pricing for this, and I think they are going to be boosting their solar capacity. They deployed 43 megawatt solar. Again, it could change based on seasonality, but it seems like solar is back in style for Tesla. In terms of insurance, it seems that, it was launched in California. It seems that it's catching on. People can save 20 to 30% on costs. In my opinion, I don't think Tesla is actually really trying to make that much money on this, though it is a huge worldwide business. If you look at Berkshire Hathaway, they make a ton of money on insurance. However, I think Tesla is trying to basically make owning a Tesla, the vehicle, a lot easier. And given that other companies are charging crazy premiums for insurance, I think this is just a facilitator to help people purchase the Tesla and not really have to worry about having to pay insane insurance. Because if this was preventing people from buying Teslas previously, it shouldn't do that now because these insurance rates are much better than competitors. So it'll probably end up hurting other competitors who are overcharging, which I think is great for consumers. Okay, so here is the giant stamping machine that Elon has been talking about. This was one of the patents that they filed where they can stamp basically something that used to be like the frame of the car used to be 70 different parts. They can now stamp it in one part, though I'm not sure this might be the 4-part one where they have 4 parts and they just need to join those 4 together. And there might be a different machine for the one part. I don't think, actually, you should have been asked on the conference call which machine this was, but nevertheless, that's going to make it way more efficient and faster for stamping out these vehicles rather than using a whole bunch of robots to try to join 70 different parts together. That's way more time consuming than having a single machine. We could also see the body shop here, so definitely proof that China is alive. They have a huge amount of equipment in that Gigafactory. It's pretty amazing that the Gigafactory 3 in China has gone from being a complete swamp to producing all of these, or being prepared to produce all of these cars just in 10 months. And it looks like there's actually way more than just a trial. There's a ton of cars on the line. This is just a snapshot. So it looks like Tesla China is getting ready to pump out a ton of cars from China, and that's pretty exciting. Okay, looking at some of the key metrics from Tesla's quarterly results, they've had record vehicle deliveries, so that's basically the first chart. Positive free cash flow, I think, is the takeaway from the second one, and positive earnings. And positive earnings is the takeaway from the third chart over here. Tesla's only had 3 quarters of positive earnings, but those 2 last quarters, the Q1 and Q2 are basically dragging down earnings. And I think if Tesla's going to be earnings positive for the next couple of months, I'm excited for them to get a PE ratio. Finally, it'll be so much easier for investors to see what this company is worth, especially given their earnings power. Okay, Tesla's also provided these charts which show the trailing 12 months, so TTM. So in terms of vehicle deliveries, they're trying to hit 360,000 vehicle deliveries in the previous 12 months. So we'll see if that happens next quarter. I believe they need to deliver about 110,000 vehicles. So maybe if they deliver 100,000 from the United States and 10,000 from China, that will add up to what they need to hit that low end of their previous guidance, which was 360 to 400,000 vehicles. The last 5 quarters, if you look at the trailing 12 months of those quarters, have all been cash flow positive for the previous year. Also, the final chart here of net income, every trailing 12 months has been negative. So I think after Q1 of next year, I think if once Q1 of next year of 2020 occurs, it'll sort of override last year's Q1, which was really negative. And I think Tesla will have enough quarters, 3 out of 4 quarters, which will be positive in order to show some sort of overall trailing 12 months profit. And then we'll have to look at what PE ratio we think Tesla should have. All right, so now let's turn to Tesla's income statement. I've put together a spreadsheet with Tesla's last 7 quarters. The spreadsheet, again, is available for free for everyone on Patreon, patreon.com/themarketisopen. So go there if you want to follow along, and you can also modify the spreadsheet and put your own estimates for Q4 of 2019. Okay, so let's go through some of these interesting line items and see what happened this quarter. So Tesla's automotive sales actually down from the previous quarter. We estimated last quarter that they'd be up, but more of the vehicles have gone towards leasing. So you can see leasing here has actually increased to 221 million. Energy generation and storage increased to 402 million. So that's a pretty big jump. Not yet where it was in Q1 of 2018. However, it's definitely better than what we've seen in the last year and a bit from Tesla. In terms of services, the overall service revenue is actually down. Maybe the quality has gotten better. Maybe the mobile fleet has helped people solve their problems a lot quicker. So that would be interesting to know why the service revenue has gone down. However, the expenses for service have also gone down. So if we turn to expenses, energy generation expenses have actually gotten a lot lower from the previous quarter, and we've seen revenue jump up. So gross profit this quarter was higher than the previous quarter, of course, because revenue has gone up and the expenses have actually gone down. So that's pretty incredible. R&D expenses have gone up slightly. Now, SG&A, selling, general, and admin, has gone down pretty sequentially. So that's very impressive. Like, I'm clapping for Tesla there. That's pretty amazing. How their business is online in terms of purchasing vehicles. Like, most of it is pretty automated. Like, that number should hopefully keep going down as they pull costs out. But that's pretty incredible how it goes down. If you look at some other car companies like Ford, for example, they spend billions of dollars a quarter on SG&A. So that's pretty great for Tesla to be able to reduce that while selling more vehicles in the quarter. Also, sorry if I jump up back to line 19. I mean, automotive, the costs of revenues for automotive sales has gone down significantly from the previous quarter, despite the number of vehicles being sold being much higher. Okay, so back to line number 29. So restructuring. So there's no restructuring this quarter. Finally, this is supposed to be non-reoccurring, and every quarter they've had something. I think that's normally related to like laying people off. So it's good finally that there's no like one-time charges. So the income from operations is actually positive, 261 million. Sure, they have some interest income, but the interest expense is higher than it was in the previous quarter. Of course, they have a lot more debt now than they previously had, so they're going to be paying interest on it. But I think, although the cost of debt is actually fairly low for the company. Okay, so they have positive income for the quarter. That translates to 80 cents a share for basic, 78 cents for diluted. Of course, now there's some people that have, because they made that offering, now there's some investors that can purchase shares. I guess they have options to do that. Okay, so let's have a look at the balance sheet. They keep flip-flopping here, but the most recent part of the balance sheet is actually the right side of the balance sheet. So you can see that the cash has gone up fairly sequentially to $5.3 billion. That's a great cushion for the company. Again, they also have $11.3 billion of debt. I mean, that's not terrible for a $50 billion company. I mean, when the market cap reaches $1 trillion, this will look like nothing. I'm just kidding. Equity has gone up. We don't really care too much about that in terms of the valuation. What else is interesting here? Like, ask me questions in the comments. I'll answer on the new TMIO channel. So I'll put some links in the description for our new channel, which so far we're talking about Tesla mainly. Like, ask me what you want to know about the balance sheet, whatever, like anything about Tesla, and we'll try to answer it on that channel. Actually, if we look here, deposits were actually up for the quarter. So I guess people are getting interested in maybe other Tesla vehicles like the Model Y. More people are making deposits, or for some of the Megapack stuff or storage related things that people need to put deposits for. Oh, by the way, also check out the ARC video, because on our TMIO channel, I'll put another link in the description, because they sold their shares before earnings, just 2 days before. A little bit amateurish to make such a rash decision like that. Basically on no fundamentals. Actually, it was against the fundamentals, and the Tesla stock is up 20% after hours. So they sold $39 million and they lost about $8 million. So I'm not sure why they made that trade. And check out the video as to my take on that trade of theirs. And also would really appreciate it if you guys subscribe to our other TMIO channel, which really helps us out in terms of putting out more Tesla videos. Okay, the cash flow statement, not much of interest here. Again, you can check out the stock-based compensation. They added back $199 million. Again, check out the last video we made to explain why they're doing that. And I mean, Warren Buffett changed the playing field for stock-based compensation a couple of years ago, a decade ago. So I think that's pretty interesting, and you'll see how that affects GAAP and non-GAAP earnings for Tesla. So check out the last video we have just before this current video. Okay, so some notes so far from the conference call, and then we'll go over some of the institutional investor questions, retail investors, and questions from the analysts. Okay, so in terms of some of my notes, so Tesla is focused on controlling costs. They did have a GAAP profit, so that's really great. Operating cost is the lowest level since Model 3 production started. So I think that's very important. That's something that Elon says on the conference call. They have the massive stamping machine in Shanghai, which we talked about. I even had the picture from the letter that they had. Model Y will also be in Shanghai. They showed sort of the roadmap for that, and they are planning to bring Model Y fall of 2020 to summer 2020. So they pushed it one, I guess, quarter earlier than it was supposed to be. Elon also says he's been test driving the Model Y release candidate. So I think that's very important. I remember when he was test driving the Model 3 release candidate. So I think the car will come out shortly after that, which they are planning to do. And he thinks it'll outsell the Model S, X, and 3 combined. Makes perfect sense because it's going to outsell the 3, and the Model S and X aren't really selling that much volume. Smart Summon was released at the end of last quarter. It was used 1 million times, and I think that's very important. They are training the network, and they do even allude to that on the conference call. So basically, they're going to be releasing a new improved version of Smart Summon, taking into account all of the data learned from these 1 million events. So it's becoming rapidly better, and this is just the beginning. So I like how they're using back propagation here. They're like feeding in the data, the results from the current Smart Summon feature, and they're feeding it back into Smart Summon to make it even better. In terms of feature complete, Elon says it's going to be pretty tight, but he does expect to have early access feature complete by the end of the year. So they're probably going to miss that, because when Elon guesses, he's usually a little off. But I think that's okay. I think improving the current features and refining those might be more important than adding a brand new feature if it's not ready yet. Margin improvement. That affects like every aspect of the business saw margin improvement. They've returned to profitability in the absence of one-time items. So, if we ever start seeing more one-time items again in future quarters, that'll probably affect profitability. They put $30 million towards deferred revenue. The CFO, Zach Kirkhorn, really wanted to make mention of that. Basically, this revenue relates to people who previously purchased cars in previous quarters, but part of the revenue wasn't recognized due to full self-driving features not being ready yet. Now that they're ready, they're starting to release that revenue through the income statement, which is making it look like they have higher revenue. And of course, it's going right to earnings because this is pretty profitable revenue. There's probably some expense, but the margins are very high. So expect $500 million or more over the next year for cars that have already been sold previously. That's going to be passed through the income statement going forward. So I can't wait for them to get rid of that. This is what they have to do, though. This is part of the accounting rules. Operating expenses were down despite order deliveries being up. So that's pretty good. They had strong cash flows despite a leasing mix increase in $5.3 billion of cash. So that's why they didn't release leasing right away, because leasing hurts revenue. But now that they've sort of regained their footing, they're able to put leasing into the market. In terms of solar, there's version 3 of the solar roof is going to be released tomorrow. I guess they're going to be talking about that more tomorrow afternoon. V3 is finally ready for big time, Elon says, and they're scaling up production at the Buffalo Gigafactory. In terms of energy, solar energy and storage, they've seen 50% higher solar improvements. Again, as I said before, that's not saying too much. So they do spend like 10 minutes talking about solar on the conference call. It's pretty smart because it's basically free advertising, and every media outlet is going to pick up what Elon says on the conference call tomorrow. Okay, in terms of what institutional investors have to say, so they ask about Tesla demand. So Elon again says word of mouth is enough to drive demand in excess of production, and there's no plans to advertise right now. In terms of Tesla energy demand, Elon expects, he says that the Tesla energy growth is definitely underappreciated, and he expects this to be roughly the same size as Tesla Automotive. So, and he says it could be even bigger. So I think that's going to be pretty crazy. He says that's pretty crazy for the future. And it would be nice to know what the capacity for batteries that they have now. They didn't really talk about that on the conference call, like how much excess capacity they're adding. I guess they're going to save that for their battery day. But Elon basically says that he had to solve Model 3 first, otherwise Tesla wouldn't survive, and now they can allocate resources towards energy. So I guess we'll see in the upcoming quarters how quickly energy grows. In terms of full self-driving, he thinks that aspirationally by the end of next year, you won't have to pay attention while driving. Somebody also asked, will there be downtime for Model 3 if Model Y is brought up? So he says, no, the body line for Model Y is completely separate. He kind of stops at paint, but anyway, it seems to be completely separate. Also, now this is interesting that the average selling price for the Model Y is going to be higher than Model 3, yet the cost for Model Y will be similar to Model 3. So Model Y will have higher margins. It'll be probably the highest, or like way higher, highest margin, highest volume car that Tesla has. Maybe not as high margin as Model S and X, but definitely higher volume, which will boost the company's overall margin greatly, especially if Model Y outsells all three of the current vehicles. Okay, so now questions from retail investors. So they ask about DeepScale. Why did Tesla buy this company, DeepScale? Elon says it's a small acquisition, just 12 people. They have expertise in sort of pulling out the efficiencies of neural nets given a smaller amount of compute power. I'm not even sure Tesla really needs that right now because they're upgrading all of the computers inside the Model 3s, especially the new ones, but they're going to start upgrading the ones that are already out there to make them way faster. I think they're only using 5 to 10% of the GPU or the full capacity of the machine. So there's no real point of saving here and there if you have plenty of space. Though it couldn't hurt. I think the purpose of acquiring this, he says, was to accelerate full self-driving. So hopefully these 12 people, they seem to be pretty big experts, though, in AI and machine learning. So that should help improve Tesla's full self-driving capabilities. In terms of Shanghai, they're currently doing trial productions. They say volume production in a few months in Shanghai. There's also a second building that people have noticed, so that seems to be for battery and module production. Plus, they're going to have to start building the Model Y in China too, so they're going to need to allocate space for that as well. Tesla Insurance, we've already talked about. They're going to be launching internationally or through more states first, actually, and then internationally. Now, what is feature complete? What's the purpose of that? So feature complete is basically being able to drive from your house to your work without intervention, but you still need to supervise the vehicle. What's left in terms of feature complete? Well, they have high-speed things like highways, low-speed things like smart summon, like driving around a parking lot. Now they need intermediate speed things like, I guess, driving on smaller streets and on windy roads, they were saying. So once those features are there, I'm sure they won't be refined or perfected, but once they're there, it'll be feature complete. Of course, Tesla will be able to recognize even more revenue. And then this time next year, or at the end of next year, closer to December probably, Elon expects way closer to full self-driving. You won't have to pay attention. So people are obviously a little bit skeptical to see that because currently they need to supervise the vehicles driving in smart summon very carefully. So I think people are still wondering how they're going to make the jump from from having to for sure able to supervise it like crazy to not having to look at all. People think there's a massive gap there. Elon doesn't believe so. So I guess we'll see how far away he is. If the car gets there though, the value of the car is going to be slowly going up over time. Hopefully, these vehicles are still affordable even after full self-driving, though that doesn't really seem likely. Okay, and finally, let's talk about some of the concerns or questions from the analysts. So in terms of auto gross margins, SNX selling prices are up due to the new powertrains. Is the China car the China Model 3 going to be the most profitable vehicle because it's going to be sold at quite a high price? I think it was equivalent to around $50,000 or $51,000 US, and because it's made in China, it should be produced more cheaply. So they kind of punt on that, which makes me believe that the answer is yes. But they say no to make sure, to look for or to model the costs of the Model 3 in China to be in line with the Model 3 in Fremont. So sure, let's go for that for now. But I think that the costs, cost reductions are probably coming. So I think they are lowering people's expectations, which is great. However, I do think that over time, the cars will become cheaper as they start refining that Shanghai factory. Will Tesla be up for supplying other OEMs, other manufacturers with batteries? And Elon says that he is open to it and powertrains. So that's interesting. He was also open to people partnering with him or with Tesla on superchargers, and no other manufacturer has really spoken to Tesla about that. So I'm not sure they're going to want Tesla batteries and powertrains. And even if they get them, I'm sure Elon will charge them a lot of money. And people will know that it's powered by Tesla. Otherwise, where will Tesla's advantage go? Okay, they also talk about V10. That's their latest software update with all those things, YouTube, karaoke, Spotify. So they're trying to make the car as best as it can. I guess the question is, will Tesla be selling apps on their store, something that we've been saying for a while. And I think they said no, or they said they haven't really thought about it yet. I think it will be the case once they have full self-driving. Elon definitely alludes to that. Once there's full self-driving, people will be spending a lot more time with the entertainment system, and you could probably do a lot more with that. Like, why not turn the car into sort of an app store? Now, Zach Kirkhorn, and it's pretty funny actually, this little interaction they have. Elon wonders, somebody asked a question about will the tax credits continue or whatever, like what percentage, like where do we see tax credits going forward? And Elon says that tax credits are actually a small percentage, but then Kirkhorn is like, yeah, it's just $100 million. But Elon says it's a small percentage, and I agree, it is about just 2% of their overall automotive revenue. So it isn't a huge deal. Like, I wouldn't really factor that in, but it does sound like they are going to be getting tax credits for quite some time. By the way, the fact that they sounded quite unexcited the entire time on the call is pretty good. I think that's good for keeping expectations low and not getting people overly excited. I think one of the things going into this quarter was that expectations were extremely low. All the analysts' estimates were all negative, and that helped the stock go up higher. Okay, continuing here. Elon does say that the Cybertruck is the best truck ever. So, I mean, that is his opinion. He specifically says that, if I heard him properly on that one. So he also makes this comment where he says that Model S and X, they're only continuing to make them for sentimental reasons only. However, they are great cars, but they are low volume. I think the fact that they're low volume is the problem, because the Model S is the fastest car in the world with acceleration. And so going forward, it doesn't seem like Model S and X will actually be that necessary to keep the company going, but it is helping with margins and profitability. So it sounds like if it doesn't cost much to keep them around, like if they're net positive, then why not keep them around? But it'd be good if the volume was a little bit higher for these vehicles. But even 100,000 a year won't end up being or looking like much compared to Model S and Y, especially with the efficiencies Model 3 and Y, especially with the efficiencies that those two vehicles have, given that they're in mass production. However, the CFO does say that they are increasing Model S and X production for this quarter. So it does seem like the demand for this quarter for those two vehicles are better, especially given the new Raven powertrain. And of course, in the future, there are going to be like Plaid and stuff are features in the pipe. So people might be holding off their purchases in hopes to get those cars going forward. But it does seem like for the time being Tesla is still going to make those vehicles. But he did say that Model 3 consumed a lot of the attention away from Model S and X, and that sort of hurt Model S and X a little bit, though there is strength in orders for S and X still. There's also about a 3 to 5% improvement, depending on the vehicle, for efficiency of the vehicle in the coming weeks. So they are optimizing for the performance, and they're also trying to make it more comfortable to feel better and have faster charging for the vehicles. Somebody asked about cannibalization for Model 3. So that's pretty interesting. Elon basically laughs at this question. He says that no, like it's a completely different car. One's a sedan and one's an SUV. So completely separate market segment. I kind of agree with that, though I guess we'll have to wait and see. What happened when Model X was launched is that the Model S sales, instead of going down due to cannibalization, they actually increased. So hopefully, I guess Tesla sees that as well, with Model 3 being totally unchanged or getting better even when the Model Y comes out. And I think it might, because you'll see more word of mouth. Plus, there's different geographies that have more preferences for each vehicle. For example, the US will probably be a larger market for Model Y because people want bigger cars. And in China, where you want maybe a smaller car, the Model 3 will still be, and even in Europe, they'll still be selling quite well. Now, in terms of the energy growth segment, Elon expects solar to grow the fastest because it's the lowest base. He does expect energy plus solar business to outperform the automotive segment. So, I mean, that's yet to be seen, because it's got a long way to go for, I guess, $450 million of that kind of revenue to catch up with the $5 billion that we've seen for automotive. So, I mean, let's see what Tesla has in that sense, but he says that the year-over-year growth will be incredible, and of course you'll see some seasonality quarter to quarter, especially with solar. Wow, okay, thank you so much for watching, guys. Hope you enjoyed that video. Please check out the description. Put a bunch of links, especially to our other TMIO channel, which we're currently doing Tesla videos. If you have any questions in the comments here, I'll see. Maybe I'll put a couple together and make a video about it on that channel. So definitely go to TMIO and subscribe to that. Also check out the ARC video on that channel because they sold the other day. I have a pretty good take on what I think about what they did right before the earnings call. Also check out the video from yesterday about the stock options, stock compensation, and check out our Shopify video as well if you like companies that are growing quickly. So let us know what you thought about this video in the comments section below. What is your take on the stock up 20% after hours? Like, where do you think it's headed from here? So let us know and smash that like button. Thank you guys so much for watching.